Hello, everybody, and thank you for joining us today. We are excited to have Boris Ilyevsky joining us today. Boris is Chief Product and Strategy Officer at the FairX, and he will be presenting Breaking Boundaries, a New Way to Trade Corporate Giants. The FairX is a new futures exchange that is offering smaller futures contracts designed for active individual traders. And excuse me, and Tradovate has been one of the first brokers to offer trading on FairX from day one when the new exchange launched. Tradovate is also the first firm to announce commission-free trades for FairX futures for its clients. And when trading FairX contracts with Tradovate, you're paying zero commissions and no market data fees. In addition, through the end of 2022, we are waiving the exchange, clearing, and NFA fees. So before Boris starts his presentation, let's just go over the standard disclaimer. Brokerage services are provided by Tradovate. Tradovate is a member of the NFA and registered with the CFTC. This is not an offer or solicitation for brokerage services or other products or services in any jurisdiction where Tradovate is not authorized to do business, where such offer or solicitation would be contrary to local laws and regulations of that jurisdiction. Futures and options trading involves a substantial risk of loss and is not suitable for all investors. Investors should understand the risk involved in trading and carefully consider whether such trading is suitable in light of their financial circumstances and resources. Past performance is not necessarily indicative of future results. All right, so after the presentation, we will open up for questions. Feel free to use that Q&A button in Zoom and ask any questions you want during the presentation, and then we'll go through those at the end of this 20 to 30 minute presentation. All right, we would like to present Boris Ilyevsky of the FairX now. So welcome, Boris, and feel free to share your screen now.
Thank you so much for that introduction. Really appreciate it. My name is Boris. I am the Chief Product and Strategy Officer, as mentioned in the introduction, and I'm really happy to be here with you guys, and I really appreciate you taking the time in the middle of your day to join this webinar. FairX was started to bring a new retail experience to the futures market. My background is in the exchange space. I go back over 20 years in equities and equity derivatives, and I'm excited to participate in the launch of this exchange and these products and bring a new experience to futures. Really wanted to thank Tradovate as well for not only being a day one supporter, but also offering our products to its customers free of any commission through next year, including NFA fees. Before I go through the headline product that we wanted to talk to you about today, which is the Bloomberg US Large Cap Index Future, wanted to talk to you about sort of some of the overriding design considerations that went into producing these products. One is that we wanted to offer a highly correlated product to today's existing benchmarks. We'll talk a little bit about that. The second one, and very important to us, is the simplicity of our product. And its size, the ability to scale in and scale out of positions, reducing the friction as much as possible, reducing fees, and making it very simple to trade, very simple to understand. So again, as was mentioned before, please feel free to use the Q&A function to ask any questions, and we'll cover as many of those as we can at the end of the presentation. So on my screen, I'm actually just sharing one of our web pages. This isn't the prepared slideshow. This is literally on our public website on fairx.com, and the product we're featuring today, and I'll go through some of the other products as well, is the Bloomberg US Large Cap Index Future, symbol B5 is the Nano version, and the Micro version is LB5. The Nano version has a notional value of about $2,400. The Micro version is similar to the Micro level contracts at the CME, and its notional value is about $24,000. Now you'll notice that they trade and at very different levels. Instead of using the same exact index level, we wanted to introduce the Nano product in a package that's very reminiscent of ETF prices and stock prices. So trades at a smaller value to immediately make it obvious that it's a very small product. The tick sizes are pennies, whereas for the micro product, it looks more like a traditional index level of 2400. The ticks move in dimes, and the multiplier is 10. So for the Nano product, it's basically 1 penny times 100, so every tick is $1. And we actually kept the same convention for the micro. So every tick is $1, 10 cents times 10. The Bloomberg US Large Cap Index, the B5, is essentially an index of the 500 most capitalized companies in the US stock market. It's very similar and highly correlated to the S&P 500. I'll show you a couple of graphs later on. I'm just scrolling through the 1 day's data and kind of showing you how it moves over longer periods of time. In terms of the actual contract specifications, it's pretty much what I mentioned earlier. You have the contract unit being $100 times the Nano Bloomberg 5 index. It's around the 20-point level. Right now, it happens to be at around 23, 24 index points or dollars and has notional value of around $2,000. We trade 23 hours a day from Sunday evening until Friday evening. So 23 hours a day from 6 p.m. to 5 p.m. Eastern every day. As I mentioned, the minimum price fluctuation is 0.01 and the tick value is $1. 1 penny times 100. B5 is the code. We list quarterly contracts very similar to other equity index products. Everything is cash settled and trading terminates at 4 p.m. on the third Thursday. So we don't do final settlement in the mornings. I know that most of you don't hold contracts into settlement, but we basically use the last index value of the day as the settlement. For the larger size contract, the micro, the index level is at the 2,000 point level. The contract unit is $10 times the index. The price fluctuation is 10 cents, and the index point value is still $1. So each tick is $1. The product code is LB5, and everything else is the same. If you go to our website, you can look at our other products. We have a Super Tech index. We're going to be listing micro crude oil futures, which we announced earlier this morning, and you can get other useful information on our website. So before we get to the trading simulation, I wanted to show you a correlation look of the Bloomberg US Large Cap versus the S&P 500 index. Again, we designed the index. It's not exactly the same. However, it is a very rules-based quantitative index developed by our friends at Bloomberg, who are licensing partners for FairX. And you can see the year-to-date correlation with the micro Bloomberg large cap index in red and the S&P 500 in blue. And you can see how closely it correlates. The actual correlation is well above 99%. And you can see that the right y-axis is at the level of the Bloomberg index, whereas the left y-axis is at the level of the S&P 500. And just below is a daily, an intraday correlation. This one happens to be from October 19th. We just picked a recent day just to show you how the index moves during the day and how it correlates quite closely, not just over a longer term period of time, but also intraday. So now let's look at the live markets. One of the reasons we wanted to do this webinar in the middle of the day is because we didn't want to show either stale markets or after hours markets. We are live. We've been live since the end of June. We wanted to actually be able to show in this webinar live traded markets. We just, again, to remind you guys, these are zero commission products. The friction of trading for these products is extremely low. The correlation to the broad benchmarks is extremely high. And because of the size of the B5, the Nano Bloomberg US Large Cap, it really allows you to scale in and scale out of your positions, take larger, smaller positions. And in fact, allows you to take positions over longer time horizons. So this is the dome that shows you the B5. Some of the other contracts, and I'll go through them quickly, are the tech, which is the super tech contract. The super tech index future is a little bit like a FANG Plus index. It is made up of the 15 most highly capitalized technology companies. Think Facebook, Amazon, Netflix, Tesla, Adobe, and a few others. And then you have the LB5 and the LTech, which are the larger versions of the Bloomberg US Large Cap and the Super Tech Index Future. So these are live markets. Right now, I'm looking at the micro Bloomberg US Large Cap. This is the tech. These are trading as they do now. You can see the markets are nice and tight, typically just a tick wide. There's very good size. There's very good liquidity at several levels throughout. So you'll see that, today, I wish we could have picked and guessed at a much more active day. Today, the market is not moving particularly quickly, but you'll see very tight markets nevertheless, and hopefully we'll see some movement. Now, in my position screen, you'll see I have some positions on with some very impressive P&L. Obviously, I didn't put on this position today, but as I played around in my simulation account, I happen to be making a decent amount of money here on my 9 contracts of the B5. Again, just as a reminder, we are looking at live data, and this is a live screen, but as an exchange employee, unfortunately, I am not allowed to trade for real. So this, sadly for me, is purely a simulation account, but clearly the trades look and feel real, and the market data is very real as well. So, I have my long 9 contracts. I'm gonna look to sell them and realize my P&L. So although it looks like I just put in a market order, I'm sorry, a limit order. So let me cancel that one. Let me sell it at 386, which is the market. And here I'm out. So everything works exactly the same. Everything should function exactly as you're used to on the Tradovate platform. Again, as you accumulate positions, and let me give you an example of a larger trade where you can buy 20 contracts. One of the beauties of having a fairly small contract where the initial overnight margin, even for 20 contracts, is only $2,500. One of the advantages of having this low size is the fact that you can put on larger positions, and as the market moves in and out in and out of favor in order for your position, you don't need to actually get out of your position entirely. You can hold your position overnight. And because there's so little friction, you can stop your exposure. You can limit your exposure. You can get in and out of the market without paying any transaction fees. So if you look at my current position, I'm long 20. It looks like I paid 387. I'm going to try to buy a little more and get a little bit longer. And if the market moves in the next few minutes, we'll be able to see how I can sell out some of them. Right now, the market is just a couple of pennies wide. If I wanted to sell some, I would change my size and say, you know what, I'm going to sell 5 out of them, out of my position, and decrease my exposure down to 35 contracts instead of 40. Tradovate also, because of the notional size of these contracts being so modest, the intraday margin levels are as low as $10 on the Nano Bloomberg B5, the US large cap, and the super tech index. So let me show you some of the other functionality that I'm sure you guys are all very familiar with, some brackets where you can put in an order on the book and have orders above and below the market to get yourself out. So everything with the FairX products works exactly like it does with any of the other contracts. In case this is something that's interesting to you, we are backed by some of the leading industry liquidity providers. Our market makers include Virtu Financial, XTX Markets, Budo Trading, and we have another market maker, Hudson River Trading, that's starting to come up. So we are going to get even more liquidity, even tighter markets during the day and throughout the 23-hour trading period. We're starting to pick up some volume. As you can see, we've traded about 2,000 contracts so far today in the B5, traded about 1,500 contracts in the micro U.S. large cap, and about 856 in the nano tech. The larger tech contract, it has just traded 53 contracts. So we're just about 3 months in. We have oil, micro oil launching on Sunday evening. It will settle to the NYMEX price. It'll be the familiar oil price that you're all used to trading. And again, it will be offered commission-free, including any NFA fees through the end of next year. So, again, I wanted to really thank you for taking the time. Really wanted to thank Tradovate for putting on the webinar. We think that what Tradovate is doing in terms of providing our contracts free of commission, free of friction, is really opening up trading opportunities in the way that they haven't been available before. And we're incredibly happy to partner with Tradovate. We're hoping to do more product launches going forward. Oil will be our first new product launch since we launched back in late June. And we're looking forward to many additional products as well. And once again, it's amazing for me, having been here for a little bit over a year, launching this exchange, launching these products, seeing these markets come to life, seeing some really good liquidity, just one tick wide, 70 on the bid, 80 in the offer, several levels through. It's an amazing opportunity to open this up to a much wider audience, to all of Tradovate's clients, and looking forward to introducing new products, getting feedback from our participants, from their clients, and really continuing to innovate and growing the retail futures business. So we have about 10 minutes left. I wanted to leave enough time for any kind of questions and answers, anything I may have missed. So, want to hand it back to Tradovate for any questions, any clarifications, anything I may have left out.
Awesome, Boris. Yeah, thank you so much for that explanation. I think that was very clear in terms of which, what these products are made of and how you can trade them so easily in Tradovate. So there's a few questions that came through. One question was, the correlation is close to the S&P 500, but is the liquidity reliable?
So that's a great question. So the liquidity, a couple of months in, and Tradovate's been a supporter from day one, but we wanted to wait a few months before really promoting and really working together on this webinar on promotional. And part of that was because we spent a lot of time building up the liquidity. And so what you're seeing today, this is now the typical market quality. This isn't something that we got market makers to do just for this webinar. If you look at these markets live, you can tell that this is not a recorded simulation of markets. This is actually what the market looks like today, and it's getting better every single day. So a great question.
Okay, thanks for that. There's a few questions. When you mentioned the introduction of micro crude oil, that seems to be well received. There's a few questions on that. So if you could just provide a little bit more detail. You mentioned it before, I think, but if you could just repeat that, the launch date and what the do you know anything about the tick value and tick
Sure.
size?
Sure. Great question. Yes, the launch is coming up on a trade date on Monday, which is October 25th. So we should see markets begin to populate Sunday night at 6 p.m. Eastern as our market makers come live in oil. It will be very similar to the micro oil, to the micro WTI contract at the CME. So it'll be 100 barrels times the oil price value. The ticks will be the same as well. Essentially 0.01 index points times 100. The big difference, of course, will be that they will be offered commission-free at Tradovate.
Okay, got it. And another question here, so quite a few actually on the market data fee. So they're asking what kind of market data subscription do you need, which in the case of FairX, there are no market data fees, correct?
Yeah, that's correct. In fact, that's a big selling point that I neglected to mention at the beginning of the session. FairX does not charge for market data. Our participants like Tradovate, who subscribe to our market data and give it to their clients through not only the Tradovate platform, but any other platform they might use. There is no subscription. There is no fee. The data is absolutely available free and live.
Okay, excellent. And then a few questions on fees. So they're saying, well, it's commission free, but there must be some other fees, but it really is, if you make $10 on your trade, that's what you get. There's no exchange or NFA fees right now. So all of those fees are waived. So it makes it very appealing. And that kind of dovetails into this other question here. The question is, there's the nano and then there's the micro. So when does it make sense to trade the nano or the micro? Obviously, you could trade multiple nano contracts, making it the same size as the micro, and you don't have the fees and commissions to worry about.
Yep.
But what would be the pros and cons of trading either of those two contracts?
That's an excellent question. It's mainly the size differential. If you want more market exposure, and again, because there's no fees, there's really no real differential between the two. But if you want to trade fewer contracts, if you want to compare the liquidity, the market quality in the small versus a large contract, it's really purely based on your preference, your trading strategy. The larger contract will, because of the larger index value, it'll tend to tick around a little bit more actively. So if you're capturing a few smaller market moves, the larger contract might be for you. But the difference with the nano contract is that the scaling in and out of your position is far easier. So if you buy 1, 2, or 3 micro contracts, you can scale out of your position or scale into more, but you're doing it in larger chunks. If you buy 10 contracts of the nano, which is equivalent to 1 contract of the micro, you have a lot more flexibility without the friction of any fees to be able to scale out of your position if it's going against you, or take profits as it goes in your favor. And again, also gives you the option of potentially taking some profits off intraday and potentially leaving the position overnight because you want to take a slightly longer term bet and you want to hold the position into the following session. But there really are no other fees. And in fact, if you get into a position and the market is not doing much, like it's not doing much right now, you can also get out at the same price and you haven't paid a commission. So if you feel like the market is not going to move in your direction or where you think it's going to go, there is no, essentially there's no penalty that you're paying for simply trading out of your existing position.
Okay, yeah, that's definitely a big advantage, and that's another point for Tradovate. If you're using the brackets like you were showing before, you could actually use multi-brackets and scale out that way. So you can have everything set up for 10 nanos, and you can scale out and have everything set up for you, so you can just have everything pre-configured essentially. So that makes it very useful as well. One other question I see here is how many days or how many hours is FairX open for trading? So when during is it Sunday night that it it opens?
Yeah, that is correct. We are open Sunday evening at 6 p.m. Eastern, 5 p.m. Central Chicago time, and we trade through 5 p.m. the following day, and then again we take a 1 hour break and we reopen at 6 p.m. So our hours and our annual calendar and holidays are very similar to what you would be used to with products listed on the CME, for example. And we are at a point where you will find that while in certain more volatile times, in the middle of the night, our markets might just be a little bit thinner. But we've observed over the last couple of months that the market quality doesn't actually decline in any significant way, and you can actually find a very tight liquid market in the B5 and the LB5 even at 2 in the morning.
Understood. Okay. Yeah, some of the questions are similar to what you've already covered, so I think that sums it up. That's basically most of the questions I think we've got through here. I would say if any questions do come up, feel free to reach out to us, to Tradovate, and we'd be happy to answer any types of questions in terms of finding I guess that's a question that may come up, not necessarily for those that have viewed this, but in the just a general question. These symbols, those are pretty easy to find in Tradovate, right? So you just is it just the B5 and LB5 and TEC? That's how you search for those symbols?
Yeah, that's exactly right. L just stands for large. So, we have the B5 and the large B5, and we have the tech and the large tech. Our ticker price for crude will actually be oil, OIL. We were pleasantly surprised that ticker was available to us, so that'll be quite easy to find. And it will only come in one size. And oil, just like the other contracts, will also trade 23 hours a day, starting Sunday night and finishing Friday evening. And it's important to note that we do now see liquidity very stable at all hours of the day and night. We see it before the open of equities, after the open, and we see it in the middle of the night. Our market makers are committed. They have obligations that they must meet, not just during the day, but even across what are called non-US hours. So even after trading ceases on the main exchanges at 4 p.m. and even after the after-hour session at 8 p.m., our market makers are obligated to remain in place throughout the night and throughout the 23-hour-a-day trading session. And in fact, I would tell you that they are, based on the activity that they've seen and the order flow that's coming in, and as our volume builds up, we are actually finding that they're getting quite competitive, and that the market quality that we're seeing is often at or even better than what they're committed to providing.
Got it. Understood. All right. I don't see any new questions right now, so I think that basically covers it. But it was very informative, and I think that we learned a lot from what you said, and kind of understanding as to the benefits of these contracts and how easy they are to trade. And if you're used to trading with Tradovate, it's like you said, Boris, before, it's exactly the same ways of doing things. You can place the same orders in the dome, in the chart, the same ways you trade other contracts. So it's very, very convenient and cost effective. Yeah. So Boris, I think that's it. But thank you so much for explaining this, for taking the time. It's been very useful. Again, if any questions come up, you can reach out to us to Tradovate in email format. You can give us a call, or you can use that chat feature in the platform, and that way we can we'll be happy to help and assist with this. And we're definitely excited about the oil contract becoming available fairly soon, and I think it's just going to be be very, very interesting to see how this develops. So,
thank you so much for having me.
Yeah,
it was
thank you for coming.
I really appreciate it. Thank you.
Not a problem. It was great having you, and hopefully we can do one of these again soon, perhaps with the oil or some other update. We'd be more than happy to do that again.
Great. All
right. Well, thanks everybody for joining, and everyone have a great day, and hopefully we'll be in touch soon.
Have a great day, everyone.
Bye-bye.